All right, Pete and Rich, thank you for joining us. Welcome to If Prices Could Talk. Good to have you guys.
Morning.
Let me set up, I'll introduce you, and then we'll go into kind of the flow of how we'll do this roundtable. So we've got
Okay.
Pete Eppele. Pete is the Chief Product Officer of Rollick, and then Rich Flati, who is the Senior Customer Program Manager at Pricefx. So we've got a number of different topics for our crew. And then obviously, if you watch our videos, you know Jeet. Jeet is our Chief Strategy Officer. He's our Head of Pricing. So we thought we would get some of our friends in here to talk about some pricing in the news, a bit of your background, and then a bit more about market dynamics and things happening in the pricing space in general, and see where we go. Sound good?
Sounds great.
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 All right. All right. So let's start with you, Pete. It'd be great to just hear a bit about your background and how you got into pricing, and take us through a bit about your story.
Yeah, perfect. So really got heavily into the pricing space back in 2001 when I joined a company called Zilliant as price optimization, and went into the revenue intelligence space as well. So worked very closely with manufacturers, distributors, service companies on helping them use data to set pricing for about 22 years. And then recently joined a company called Rollick that does customer engagement software in a marketplace for recreational equipment. And yeah, you see, I mean, pricing is present everywhere. So amongst marketing automation and digitization, pricing certainly is a part of my world now.
A fun company too. Seems like it would be fun based on what you.
With a name like Rollick, it gets you in that happy mood. Yep.
Yeah, exactly. Exactly. All right, Rich, how about you?
So I started off in pricing in the late 90s. I came from the manufacturing and supply chain space, and ended up taking a job with a company that does what we would now call CPQ, but it wasn't called CPQ then. We had an online configurator and pricer. That company got acquired by Siebel, and then I worked in Siebel's CPQ practice, and we did a lot of pricing, a lot of telecoms, a lot of more complicated pricing, and I developed quite an interest in it, not realizing all the opportunities there, and then joined Zilliant and spent a dozen years at Zilliant, both in sales and delivery side, working with customers. It was a lot of fun. I left and then made my way back to pricing now again with Pricefx.
I didn't know you started with the CPQ world. I
Yeah,
didn't know that.
yeah,
For the audience, I met Pete and Rich through Zilliant, and I was a customer of theirs, and that was like 20 years ago. So I've known these guys for a while, but it's really interesting because I feel like CPQ has changed so much since those days, right? You know, we were still trying to figure out whether CPQ was, I don't know if it was strategic back then. It seems, it felt back then more like something to keep us organized. And now it feels like CPQ, in today's world, is a little bit more strategic in how to refine your pricing and be a little bit more accurate with pricing. You guys feel
yeah.
that that's kind of the transition of CPQ?
Yeah, I mean, a lot of companies have sort of gone for an unbundling strategy in many respects. And so, obviously you need some way to manage that. And even just with legacy products and trying to then sell them a new product, you need some way to bridge what they bought before to what they're buying now. Manage, is that something we can sell them, and what should we charge for that? So
Yeah.
it's a very interesting thing. I mean, CPQ has become more of a life cycle thing in many respects than just a one-time upfront purchase.
Yeah.
And, my 2 cents on this one too is that, like, when Rich was in the in the space, a lot of it was focused on configuration. It was, I have a configurable product. How the
Yeah.
heck do I sell this thing and make sure I can fulfill against it? That I don't violate any rules. I'm selling what I can produce, and and all of that. And then I agree with you, G, that I think the PQ and CPQ came along a little bit later, and people started to realize, wait a minute, the pricing, the quoting of this thing, making that process more efficient and smarter is really important. We, and the other thing too, that, when you're in a configured product world, pricing can be so complicated, as because things can feel like a one-off in that case, and you're doing maybe a lot of cost plus or price buildups and all that. And so being able to layer intelligence on top of which configurations look like other ones, how do I use data to get smarter? I think that's continued to evolve quite a bit over the last couple of decades.
Where do you guys fall, by the way? This is it's interesting to me because I had at Ingram when we implemented Zilliant, one of the things that I wrestled with a lot was giving sales full visibility or not to give sales full visibility. You know, when you're talking about CPQ or pricing or whatever it is, you know, that's always kind of the debate. Where do you guys fall, especially in your experience in multiple companies gone through it? Is there sort of a best practice that you guys believe in?
Yeah, that's a great question. I mean, what I've seen probably work the best is, I think back, if you take the clock back a while ago, and when you say full visibility, one of the things that pops to mind for me is, do you show the salespeople the cost?
Yeah,
Like
that's right.
as an
For us, that
example,
was a
right?
big
Like
question.
that's visibility. I think we saw a lot of people move away from that. I mean, especially in a time, I mean, costs is moving all over the place. We've seen people give guidance just for sales reps, like, I want you to price within this range, and you've got autonomy to work, but it's not necessarily the cost that you're getting visibility to. It's more of a fair way for how to price. I've seen companies be successful with that, and go as far as tying incentives to where you fall in the range.
Yeah, more of
That
the
seems
price
to be a good.
realization.
Yeah, exactly.
How about
Yeah,
you?
I think the same. I mean, I think a lot of people specifically around costs have moved away from showing costs and using more indicators like Pete was saying, so some sort of margin index or relative price index to give them an indication that this is a good price, that's a not so good price, without getting them tied up on, costs and replacement costs and all the things that salespeople can likely use to justify a lower cost without really thinking about what the market's willing to pay.
Yeah. I just think it's such a slippery slope, right? In giving visibility like that. You know, forget about Ingram, but I've had clients where um, in having that full transparency, what they would end up doing is putting a quote unquote brick in their cost. So you would show the cost of sales, but you would have a 10% brick in there to show like an inflated cost in
The
order to,
pad, yeah.
maintain that sort of floor of a margin, and that's how they kind of gamified the system, which is like, okay, I get it, but at the same time, what behavior are you driving, by doing it that way? It's kind of, gaming the system.
Like I've seen that with, like, you have product cost, you have inventory cost, you have
Yeah,
sales cost, like
that's
all of
right.
this. There's all these things you're managing, and they're confusing. Again, I think where I saw some people evolve to an interesting one, and a customer story that I'll give is that they gave a range. The high end of the range, they would color the price points green, and
Yeah.
the middle it was yellow, and the bottom it was blue, not red. And we're like, well, why is it blue? It's like, well, it's blue because that's how the sales rep's going to feel when they see their paycheck if they're using these prices all the time. And and it's funny, but like it makes a lot of sense to to essentially kind of give people visibility, but also empower them. It's like, hey, look, if there's a direct correlation. You use a better price, you're going to make more money yourself.
Yeah.
And I think those were really I mean, it can be hard to get there, but those are great environments.
Yeah.
It's kind of funny, like it's like an interesting example of ways to kind of keep things simple. Like I was just thinking, as you walked through your experience and your background, there's so many ways that I would think things have evolved, changed, and gotten way more complicated over time. So like as your systems get more sophisticated, as people get more sophisticated with using those systems, how do you keep things simple?
That was always a balance for us, right? When you talk about AI and bringing AI and intelligence into pricing, sometimes you talk about, oh, AI can detect these very subtle patterns, and you should do this here, you should do that there. It's true. When you bring that out in the real world in front of sales reps, and on one deal I see this price, and the next deal I see this price, you can get a lot of pushback. And I think that's all. I mean, most companies are trying to figure out what that right balance is of how far, how granular and sophisticated do I come with my pricing before I just confuse my own people and my customers, and it becomes untenable for me. I think that just figuring out how to strike that balance is important. And like you said, I think, we've seen in general, at least experience I've had, is keeping it more on the simple side and the explainable side more than anything, right? You're getting a different price because you need the product faster. You're getting a different price because you're not buying as much. That'd be very powerful.
For us, it's I can't tell you how many clients we see that they don't even have structured data, yet they want some kind of like silver bullet in technology or platform or whatever it is up here. And it's like, wait a minute, you're not even using normal dashboards to run your business right now. Why are you talking to me up here? You should really get some of these things cleaned up and get your processes in order before you talk about where you want to go. There's nothing wrong with setting a target, but making that jump from like having terrible data and visibility and not using data to make decisions today to thinking that you want all these nuances of behavioral data, transaction data, historical data to make decisions in the future, that's a huge jump. And a lot of these clients, they struggle with that.
Yeah, simple I think is always better, both for the initial adoption, but also for the sustaining improvement. So, if you layer in complexities, typically when you see a customer leadership change, so, your sponsor left who understood all the nuances of something that you built that was very complex, they leave, the next person comes in. It's difficult for them to come up that learning curve and to really understand what the person prior did. And that's when you typically see a step back in some of the maturity of the pricing teams. They sort of like turn it off. And so if you keep it simple, not just initially, but long term, I think you end up with much better results.
What I struggle with a lot is are folks that want to build solutions, be it technology or even processes for corner cases. It's like you're going to get this one order once a year, and you want to build all this infrastructure to avoid that one thing. And I find that so like difficult because it creates this layer of complexity which slows down your business, which does all these other, it has all these multitude of effects that you're not taking into consideration because you're trying to be quote unquote perfect with your pricing. And we find that a lot in this environment where people are struggling to be perfect when 80% is good enough, and you're going to be much more nimble, quick to react to customer needs and things like that by keeping it simple.
Do you suggest then routing that to like a deal desk when you see those conditions instead of?
It depends. I mean, as always, right? It really depends on the situation. I love the concept of a deal desk. I really like escalations where you don't have one person with the burden of making all transaction decisions. I think it's nice to have a good routing process and processes in place to minimize risk, but at the same time get a second pair of eyes on some of these deals that get complex. So I love deal desks. I love routing to deal desks.
Yeah. Yeah, I think, I mean, the other thing I would add in here too, because I'm just remembering a very specific instance of talking to somebody, and we were looking at a segmented analysis of product, like different versions of their product and different quantity bins. And they're like, I want to understand like how that price, there's a really low price. It's like, I want to understand what was behind that and why that happened. And I remember kind of having the conversation, like, I mean, kind of like, who cares? Like, don't, to your point, like, let's not overanalyze that one. Let's basically just sort of understand where the meat of the range is and try to get people within just closer to each other, right? I mean, and try to move the averages up, to your point. And we're not going to get every corner case, so we don't want to overanalyze every deal here. I mean, our goal really is that we're trying to shift a mean. We're trying to get people a little bit more corralled and shift a mean, essentially, to drive consistency and figuring out how to reward that. It's hard. I mean, it's easy to say it like in theory, but I think not obsessing over single deals, to your point, is super important, and just making sure that as you're evaluating deals, it's on criteria that you care about as a pricer. Like it's a criteria that you want to you want to reward your sales reps for, you want to reward your customers for if they follow it.
Yeah. It's you reminded me of a story, Pete. I remember being sort of a younger pricer at one point, and I was presenting sort of this new pricing strategy to a client, and it was working well. And I still remember this client going, well, you didn't really shift the mean. If you take these high-end transactions out, then your shift goes, your mean goes down to at average or below, and you're sitting there and you're like, well, if you take out the top end, you got to take out the bottom end. You can't just pick and choose which transactions you take out to fit your story, and it's funny, if I look at the world of pricing back then to where we are now, we've done such a great job as a community to build tools, to build build processes, to build capabilities of individuals. We're so much more analytically heavy now, which is great. It's really good. But there's still that notion of, I have already made my decision and I'm going to use whatever data I can find to confirm my decision, rather than I'm going to use the data to make a decision. It still exists today. It's just really, as things change, things really don't change, when it comes to that.
I do find though that in talking to people, executives, that versus where we started off, say 20 years ago, Pete, where we were doing a lot of proof of concepts and having to prove that it worked, and the burden of proof was always on us to say, yes, this is working. Now I think there's a sort of a pretty broad belief that you can affect better pricing without hurting revenue. Your margins can go up. It can be a win-win for both the supplier and the customer. When done within reason. And people are very open to that now. Whereas 20 years ago, I mean, you remember those projects where you really had to show in great detail that you were not hurting the top end in order to improve the margin rate.
Yeah.
Agreed. And I think, the thing I'll add too is that in a business, they're like, when you think about where the mental capacity in a business goes, so much of it is like on the top 10% of customers or deals or products or whatever else. And people are like, okay, well, I want AI to prove that it could be smarter than me on this stuff that I have all this amazing information and experience with. And you're like, yeah, maybe it can, maybe it can't. Or maybe like maybe where you don't have a lot of mental capacity kind of directed at like the bottom 80% or the long tail or whatever is a great spot for you to start, to start making systemically better decisions with data. So it's one of those things a lot of times where you could be like, hey, look, this thing isn't going to be necessarily smarter than you all the time on stuff that you know more about, and you have the whole history, and it's a lot of relationships. So you maybe use data and tools more as more of the driver in places where you just don't spend the time, or it doesn't make sense to invest all that human capital. That's it's a good place to start. We saw a lot of people do that as well.
Rich, you made a really good point. I do agree that, even as a practitioner back in those days, I questioned whether the software works. Does the software work? That's the big question we need to answer, right? Back then, 20 years ago. Now it's different. Now it's like a given that the software will work, but can I apply it in my environment? Is it the best software for my environment? And do I apply it correctly? If we're talking about that piece of it, do I have the right strategy? So the questions are a little bit different now that I see people asking, now that I'm helping some of these clients. The question has changed, but the evaluation of the output still is, I have a belief, and let me try to find the right data to prove my.
Yeah. There's also a time element in that where you're looking for the proof point, and is it going to come immediately in 6 weeks or 8 weeks or 12 weeks versus you take a longer sustained approach to margin improvement. I don't know if we still have gotten to the point where executives are willing to take the risk, if you will, to implement something that will not necessarily yield demonstrable benefits in 6 weeks or 6 months. It might be a year, it might be 2 years, it might be even beyond their tenure. But it's the right thing to do for the company. And I'm not sure we're there yet. That might be the one thing we still haven't gotten to.
Yeah. I think the automation piece, you're right. Pete, you mentioned it on the long tail, at least, right? If we put resources on the top 20% and the long tail, we kind of automate as much as possible. That was our goal. And when I was a practitioner, but Rich brings up a good point. It was, even in doing that, there was always sort of a block that said, no, you can't have the machine do this part. You need to have a human review this part. And you start having conversations like, well, if you put a range in, you can have the machine, approve these things within a range or tolerate. And then you can, bump out things that are outside that range. And there was a lot of people very uncomfortable with that aspect of it. And I think it's still, to a certain extent, it's gotten better, but to a certain extent, that still exists today with any type of automation that you try to put in place, regardless of the type of equation you use.
Yeah, the analogy I use is pre-check, right? So, if you effectively, if you give a sales rep guidance, you're putting them in the pre-check line, which is like, I don't need you to take your liquids out because like you've met some of the conditions where I trust you. I'm not gonna let you walk through there without putting it through the X-ray machine, not go through the metal detector, but like you don't have to go to all those steps versus the other people who haven't established that. And I mean, we've come to live by pre-check. Any executive in the world would say that. If you use that analogy, you sort of can maybe trigger them to say like, yeah, there is that concept of um, as long as you meet these conditions, you don't have to do what the rest of the people have to do.
I like that a lot. What do you guys think? One of the things that we have a point of view on, which is that the market itself, we've always known is dynamic, right? Market's changing. It's changing because you're coming up with new products. It's changing because your competitors are coming up with new product. The consumer demand is changing. Market holistically, interest rates are going up and down, or whatever's cooling off, or it's getting hot. Like there's so many things going on. And I feel like nowadays, that cycle of the dynamic nature is getting shorter and shorter and shorter, right? And so as we are advising our clients, we need to be aware of that we're not doing a pricing project or setting price as a one-off activity. It's something that needs to happen on a continuous basis to keep things quote unquote fresh, right? Mm-hmm. So first of all, do you agree with the hypotheses that cycle time of the dynamic nature of the market's getting tighter or shorter? And then have you seen anybody do a good job of staying on top or keeping their prices fresh?
It's a big question. I mean, I think it's a hard trend. So yes is a short answer to are things moving faster? Yes, for sure. And and buying is changing a lot in terms of a lot more research happens online or through the web. I mean, I think the whole dynamic changes there. Have you done a good job with people keeping things fresh? Wow, what a big question, right? I think the people I've seen have a lot of success are communicating very actively and openly with their sales organization too. Because to your point, like the external world is changing, but the other thing that we see, like not to be discounted, is like sales reps sort of see pricing through their own lens, and they're not even necessarily getting the lens of the full company in terms of what they see, and they're skeptical, right? I mean, they're very skeptical. So, where I've seen people do well, there's been a lot of transparency. There's been a lot of dialogue. I mean, exercises, like I remember being in rooms and seeing people do an amazing job with exercises. Like, let's put an item up on the screen and put the cost up, and then have people punch in their phone. What do you think the price of this thing is? And you start to realize, like, wait a minute, like everybody thinks about price in this room. Everyone's got a different set of experiences and thinks about price differently. And then you put on top of that, the world is changing externally. So I think the idea that basically says, like, come to the recognition that, what we're trying to do for the organization is help you guys benefit from, you have to bridge that people, like other people's experiences are valid and you can learn from those. And we've got to kind of keep up with the external world. So we got to work together to make this whole system work, to be able to, and come up with a system that allows us to keep those prices fresh. So we're going to do things like we're going to look at our commodity indexes. We're going to benchmark our prices relative to competition. We're going to, and kind of come there together. But the trust of the sales force, I think, as you want to move faster, the trust of the sales force is just critical, and you got to plan.
That's a great point
to build that.
That's a really good point.
I guess over time too, as those things kind of break, if sales is not kind of bought into what the pricing team is saying or setting you up with or whatever, and then more discounting happens, and as the communication falls apart, these two things kind of go further and further from each other, and things just crumble from there, I would think, right?
Yeah, I can totally see that. I like that exercise, by the way, Pete. I might leverage that one for client starts for projects.
Yeah.
On one of your other podcasts, you had it was Brian talking about the increases in price lists, and then the subsequent slippage, if you will, in terms of transactional pricing. And I always thought that you have to sort of be very careful with price lists because they are a signal to the market. But these companies that just keep raising prices and then subsequently don't get a reasonable traction with their sales team in terms of transactional price increases, like that's when people become very cynical. Like, and that's when the sales team and the pricing team sort of diverge. And I think people then just feel emboldened to be make whatever decision they want because
My own
that
thing.
priceless price
Yeah.
is
You know, we have a concept that we've been working, a framework that we've been working through, which is the concept of pricing power. And what we are talking to our clients about is, in order for you to understand your pricing power and to increase your pricing power or maintain it if you have it, you really have to work on two axes. What you guys are saying. One is your product or your service, and everything else you do for your customer. It has to be differentiated, right? You have to understand your competitors. That's got to happen on one axis. The other axis is how you go to market. That piece of that sales, and that, how are they trained? How are they? Do they have the right capabilities? You know, do they have right visibility? Pete, to your point of everything that you're using, all the value communication pieces, all the maybe sometimes the cost information, whatever it is. Do they have full visibility and understanding to go execute that price well in the market, right? And you know, are you making the right partnerships in the channel? You know, all of those things. That execution piece becomes so large because I think we started the conversation. Price is such a big word. It has so many. You know, it's not just one number. It has so many levers across the organization that, you know, if you don't do the execution part well, then you can have the most differentiated product and you're not going to have pricing power. It's just one axis of those two things, right? And it is really important to have both. Otherwise, your price realization is not going to be there, and that's the end game. That's the real game. Yeah,
that's the outcome. That's an interesting way to think about it.
One of the things that I'm curious to know is I'm kind of looking at how to understand the market. And I know you guys have done a lot of sort of data integrations in your past and your history in multiple companies of looking at market data and bringing it in to use for pricing and things like that. Have you seen a company or a case that you said, oh, wow, they've done a good job? I think, Pete, you alluded to some of the indices and things that are out there that's public that people have brought in to set some of their costs or their markups on. Have you seen anything else that's interesting that people have tried to do to estimate the market changes?
Are you thinking about life cycle pricing? So, you know, that kind of thing, Jeet, trying to run things out and, you know.
Yeah, that's right.
Yeah.
Right.
Yeah.
Because as soon as you see some of that, right, you're expecting a certain inventory positioning to run through the channel. And if you see a clump of inventory, something's happening. It's an indicator of something's happening. So either it's if there's a new product category that's coming out, people are flipping, you know, products, or there is some type of a issue with the pricing that's out there that's not aligned with what the market needs are.
Yeah, that's a good point too, because if you're just looking at your sales, for instance, you could be you could be selling into the channel, but then the channel's not moving it. And you could think, you know, business is going well, but it's not really coming out the other side. Yeah.
Yeah, you're gonna get a lot of returns pretty soon.
That's gonna be rough. Nvidia isn't dealing with that problem right now. They've got the opposite problem, right? With the big backlog of orders.
Nvidia does have the opposite problem. My God, their stock price is crazy right now.
Great. Yeah, we saw the same thing. I mean, we are working in the recreational equipment space now. You talk about an industry that took off, like RVs as an example, took off in the pandemic. Very interesting to see. And so, you know, the demand was surging. Now you see a lot of people who essentially are like, we got more clicks on the sell my RV than buy a new RV.
That's interesting. I didn't think of it from that perspective just now, but you're right. It's very vertical specific, right? The pent-up demand and what happened during the last 3-4 years.
Absolutely.
All the people who are like, we're going across the country, we're putting the kids in the RV, we're gonna homeschool them, we're getting out of here.
That's right.
What did I do? I don't want to spend time with these kids.
It's crazy. It turns out that has about a 3-year cycle to it. Yeah.
I wonder if RVs have the same cycle as boats and other things, where you kind of buy it because you think that the romance is there, but then you have to maintain it, and you realize, wow, this is more work than I thought it was going to be.
Right.
Sort of the dropout.
Right. Yeah. I mean, pets, all the same thing that happened during the pandemic. Yeah. You definitely see a lot of that right now. I mean, all of those industries are down, and I think you've got interest rates and you've got basically there's just this glut. They were, they were so happy a couple of years ago, and now they're still trying to see their way through. So, the question, a lot of what we see and part of what we provide with Rollick is the ability to do outreach to people, like, to essentially more digital outreach to people to try to engage as they're starting to engage in a marketplace and show interest. I mean, dealers are happy to have a conversation with nearly anybody right now, right? With the point basically being, when the supply demand dynamic is tipped, there's just so, you see on this, the people that are selling just putting out so much more effort to try to engage and look for new ways to engage and incentivize and all that kind of thing, just to try to smooth it out. I mean, it's cyclical, but people, I mean, obviously people want to kind of bring it back from the trough as quickly as they can.
Do you see it changing based on like the price point of the goods or the vehicles? Meaning, like, is it like the home prices? Like, I've been just curious about home prices, so I've been looking at home dynamics of demand and supply and demand. And what I'm seeing is, like, at the top end, it's actually really, like, the year-over-year numbers are pretty high. I'm like $2 million plus, but on the mid-size to low end, it's like down by a lot. And it's very interesting to me why and how that high end sell through is just, keeping pace at a very rapid rate.
Yeah, I mean, what a great question. We'll see, we see RVs out there that are $1 million units, for instance. I mean, I don't know if you're in the market for one of those, but yeah, like you said, there's a lot of times those are a little bit different in terms of the dynamic, but overall in the industry, there's high interest rates right now, there's inflation, but we're not seeing prices necessarily move up at the level of inflation, because and we're seeing a lot of people who are trying to sell look to find, to come up with good financing offers, working with lenders to try to keep that cost managed, right? Because that's another interesting thing we didn't really talk about, but the total cost equation, in these cases, right, might include financing and everything else, and you're just trying to get, the best out the door price for somebody. But yeah, I mean, we're those industries, they're taking it. It's a little bit tough right now. There's no doubt about it. There's no doubt about it as they try to weather this.
Yeah, that's great.
I know what I'm doing as soon as we're done, which is looking up what the interior of $1 million RV looks like, because I have to know.
Buy yourself a Tiffin. Yeah, they're
I
awesome.
have to know. So interesting. All right, well, I think we're coming up on time, but thank you for joining us and coming on the podcast and chatting about all these different things. I really appreciate it. It was fun to have you guys on.
Yeah, thanks.
Great. Thank you very much, Tracy.
Thanks, Jeet.
Thank you, Jeet.
I love this.
Take care.
Time with you guys.
See you soon.